Let's welcome in our next guest, Nischal Maheshwari, Head Institutional Equities at Edelweiss Securities. Nischal, good morning. Thank you so much for taking out time for us. Firstly, what do you make of the developments in the last week? First, we had the RBI governor leaving, which markets absorbed. Now we have the Brexit impact, and that also the market seemed to have taken in a positive way, or not reacting much.
So I think both the events were a surprise actually, and I think the first event will have more to do with the Indian economy than the second one, and both of them will see impact coming only in the medium term, and nothing is going to happen in the short term. The first event I think will be put to test once we have the ECB round of money coming out of the system basically. That will be starting from September till November. So that will put to test the new governor which comes into place. But as far as Brexit is concerned, I don't think that there is any immediate fallout as far as the emerging nations are concerned. We have to just look at it saying that whether it's going to have any immediate impact on the dollar. The dollar appreciates, we may see once again risk of kind of a situation and money flowing out of the emerging markets to the US market again. That may put a bit of pressure on the emerging markets. But otherwise, I don't see Brexit having a major impact.
Gold is up about 6% in the last 2 days. Do you think that will have an impact on the domestic flows? Because a lot of retail investors do like to invest in gold as well.
So I think any asset class basically will have a sustainable price up if the expectation of it going up further is there. I think similarly with gold also, basically we are seeing that kind of risk of kind of a situation is appearing in the world. Then you can see that the gold continues to do well, and then you will see that the retail guys will also come in and try and see if they can buy more gold basically as an investment. Otherwise, gold will have its own demand, which is around 600 per ton basically per year. And that's the demand which is more of a consumption demand rather than actually investment demand. So I don't see at the moment that kind of a situation happening.
As far as domestic flows is concerned, you believe that it will be strong? I mean, we saw the month of Jan and Feb, which was much worse than what we are seeing now in terms of currency, in terms of most of the major other asset classes going down, or a classical risk-off trade. Even that time we had inflows coming in. So you don't really expect that there will be big redemptions?
I don't see big redemptions happening unless we see markets coming off a lot from here. Maybe if it breaks 7,500, you will start seeing redemptions happening. Interestingly, most of the retail investors have behaved very maturely basically in the last 1.5 months. And a lot of these issues of expectation of governor going, expectations of a Brexit, expectations of a FOMC rate hike, I think all these things have been taken very maturely by the retail investor, and we are not seeing any redemption pressures.
The FOMC rate hike is concerned with Brexit happening, global markets going for a toss, dollar continues to rise, other currencies are much lower. You think the hike may be delayed? That is something which the US Fed looks very closely at.
No, I'm very sure this is not going to happen this year at all now.
Right.
When I'm saying calendar year, I don't expect anything to happen, yes.
Right. The strength in the mid-cap space, do you think that will continue? Nifty may just continue to hover around below the 9,000, below the all-time high mark. But mid-cap space will do well. Even today, the broader markets are doing very well. And that has been the trend in the last few days.
I think mid-caps, selective mid-caps will continue to do well. I think people are going to focus once again back onto the domestic consumption stories, stocks which are more domestic oriented. I think that's where the focus will come back to, given that the world is a bit of a turmoil at the moment and nobody is very sure which way it is going. So I think this will impact exports from India and all. So I think domestic stories should continue to do well.
Right. As far as the mid-cap space is concerned, the relevance to GDP or GDP growth is very, very limited. That's why numbers may still continue for a lot of select mid-cap names, which people have now started to invest in.
Sorry, what's the question?
My question is that in the mid-cap space, people have realized that the overall linkage to GDP growth is very, very limited. So even if the GDP is growing at what rate it is and not expanding, mid-caps would continue to grow in terms of earnings. So that is something which continues to see a lot of investments attracting towards that space.
I don't know where you got this number basically, but mid caps do very well when the GDP does very well basically, because it is all aligned to the economic growth. So mid caps generally do not do well basically if the economy is not doing well. So I think basically if the economy is not doing well, I don't see mid caps doing well.
Right. As far as cement pack is concerned, any view on that sector? Do you think from capital goods the shift has happened on the cement package to play the India growth story?
So I don't know actually. Cement and capital goods are two separate things basically. So cement pack will have its own story basically, and capital goods will have its own story. But at the moment, I think cement seems to be still picking up, but capital goods we do not see much strong demand as yet on the most of the companies.
Good morning, Mr. Maheshwari. This is Anindya here. I just want to come back to one point that you made earlier, that the exit of Raghuram Rajan is going to be of much greater significance than the than Brexit. Could you just elaborate a little bit more on that?
Because Brexit is it's a much wider thing basically, and it doesn't impact India directly. It impacts all emerging markets, and India gets impacted along with that.
Just to rephrase that, I just wanted you to explain a little bit more what you mean that when you say that if Raghuram Rajan goes, what is the key significance there? What difference do you think it will make?
No, Raghuram Rajan basically, obviously, he's been a very successful governor. So incrementally, we have to see who replaces him. That becomes the most important thing. Whether the new governor, which is coming in, follows his policy on inflation and cleaning up of the bank balance sheet. So I think that's why it becomes important.
So one of the things that Raghuram Rajan in his presentation and others have shown is that interest rates being wherever they are, the big drop in credit growth has actually come from public sector. The new generation private sector banks have actually, we've seen a growth in their lending in the past few months. If one takes the long term from let's say beginning of, the medium term from the beginning of 2014 onwards, when Raghuram Rajan came in, what difference will that inflation targeting make? Because is the stressed loans in the public sector space which is actually causing the decline in credit growth?
Which is not surprising actually, because public sector banks do not have the space to lend anymore, and they are all struggling with the capital adequacy ratio. So the market share is shifting to private sector banks. That's as simple as that. There's nothing more to say about it.
No, but what difference will it make if there's a new RBI governor? What can that RBI governor do to change this? I mean, because the bulk of the loan portfolio will still be, especially to government, will still be with the public sector banks. And if that is going down, then, or let's say bigger sectors like whether it's infrastructure, whether it's power, that's the space. So if that's going down, what can an RBI governor, new RBI governor do to change that?
Obviously, I think there are a lot of policies basically which the RBI governor on its own can do, and then I think along with the governor, the government policies also have to come together basically so as to bring the economy back to 8.5–9% kind of a situation. Obviously, the couple of things which the governor can look at in this kind of a situation is if there is possible of monetary easing. So governor has the monetary side of the stuff to look at, and the new governor will decide whether they want to go ahead with the monetary easing policy or not. Second thing the new governor can do is continue with the policy of cleaning up the banks. So I think these are two important things basically which the previous governor started, and let's see if the new governor comes in and follows the same policy.
My question, Mr. Maheshwari, is that cleaning up of the banks means that you actually make banks lend less. Now, the problem right now appears to be that we have several sectors.
I don't think so.
All right.
I don't think so. You are getting confused about it.
Okay, explain what you mean by that.
I'm saying why does it mean lending less?
Because when there is less money to, if they have to provision, if they have to clean up, if they cannot restructure, they're less likely to lend.
No, government can come and basically provide the capital. These are all government-owned banks.
So you're saying
So
that
if
the key
government can
thing
come
is
and
for
provide the
government to
capital-
come in and provide capital at this moment. I mean, we've been hearing this
Yes.
since the beginning of 2000, I would say from at least early 2015, that there'll be recapitalization to a significant extent. That has not happened. Do you think that the government now needs to do that on a bit of a war footing?
Why do you say basically? Government has already said in this last budget that they made a provision of 25,000 crores to recapitalize the banks. And
Yeah, but is
if you
25,000 crores
remember-
enough at the moment?
No, I think basically you are getting confused about the whole thing. The governor has said that the 75,000 crore is the big hole basically, which is there for the current situation.
Yeah.
And this needs to be made for the next 3 years. So 25,000 crore is sufficient for 1 year. That's what the RBI governor says, and that's what it is.
You think that's precisely what I'm saying, asking you. You think that this is sufficient for each year for us
No,
to
I
get
don't know
25,000?
the balance sheets of the governor basically. So obviously, I will go with what RBI governor says.
And your estimate is whatever is the RBI is saying is at this moment sufficient. That's what I'm asking. You're okay with that?
That's right. That's right.
Yeah.
I don't know anybody else has a better estimate.
You know, there are several estimates which seem to suggest that there is a bigger hole, but I'll let that go at the moment. You were saying that, let's take the mid-cap space. You were saying there's a very close correlation between the mid-cap GDP growth and mid-cap growth. Now, would you at the moment bet on mid-caps?
Depending upon the mid caps, which mid cap we are talking
All
about.
right. Is there any specific sector where you think that I understand you don't want to be specific, stock
Domestic
specific,
consumption stories.
the consumption story. If you could be a little bit more specific without, I understand you don't want to tell us about individual stocks, but if you could be a little bit more specific as to how would our viewers, what should they do to select a mid cap?
I think they don't need to select it themselves. The best thing is to basically invest into mutual fund and let the fund manager select the best mid caps for them.
All right. You're saying that do not expose yourself at the moment directly to equity, directly to stock, go via fund managers, mutual funds.
Yes, yes.
All right. That's an important thing for our viewers to understand, that best to go through mutual funds, do not dabble in stocks at the moment. Is that because you think that there's going to be significant amount of volatility in the near future and it's difficult for a retail investor to actually track that and not be demoralized?
No, I think retail investors always are at a disadvantage. So it is not today, tomorrow or day after. It is always at a disadvantage basically as far as, so they should take help from the people who are in this industry, who are experts at this.
All right. If you had to, when you said that you would depend on which mid cap, where would you, I mean, if I had to select a mutual fund, let's say, should I take a mutual fund which is exposed to a particular sector, or should I take a broad-based mutual fund? What should I take?
It depends from mutual fund to mutual fund. I do not have a detailed study on the mutual funds.
All right. Let's say if you had to tell me that what sector should I look for?
I told you consumption.
Consumption. But just specify a little bit more.
I don't understand your question. What you say asking?
I'm asking you if you could give us breakup of a little bit more sectors. If you don't want to do that, you can go ahead and tell me you don't want to do that. It's pretty simple to. It's a simple question, Mr. Maheshwari. If you can't tell us what sectors,
so
consumption is not a sector. If you
I
treat
think
it as
so
a
basically
sector, I don't
consumption is a
think
sector if
Edelweiss
you
comes out
understand
with.
it.
I don't think Edelweiss comes out with reports which say just consumption is a sector. I have a few Edelweiss reports. in front of me.
FMCG.
Yeah, that is
Yes,
what I'm
yes,
asking. If you don't want to tell us, please tell us you don't
So
want to tell us.
FMCG, auto, some of the sectors basically, which I think one can look at it.
All right. And could you just give us the rationale behind why you think it's consumption?
Because I think there's a good monsoon basically, there's money which is coming back into the hands of people. I think people, and that's why the consumption is going to do well.
All right, let's take something like the public sector and the government sector, where there is a certain amount of salaries being given out. We understand the government has now decided to reduce the amount of DA that it's going to give this particular year and spend it over the next 4 quarters. Do you think that that is going to reduce a little bit of the consumption demand, or you think that's fine?
No, I think that is going to be fine.
You don't see any slowdown in demand at all?
No.
All right. Let me ask you a question about specifically about GDP growth. When I look at GDP growth of 7.9%, 55% of it came from discrepancies, right? Do you see that discrepancies actually matter in this particular case, or you think that the 7.9% is actually a robust number to be trusted?
That's a number which RBI puts basically out, and we believe that's a good number.
No, I said that what the RBI puts out, sir, also includes exactly the breakup of discrepancies. When the discrepancies were 23,000 crores the previous year and 1.2 trillion crores in a comparative level, the 55% of that 7.9% came from discrepancies.
Yes.
Yeah. So since you analyze it, I'm just asking you whether you can analyze it for us.
No, I do not analyze. I can ask my economist to get in touch with you.
All right, okay. Thank you so much for being with us, Mr. Maheshwari. It was a pleasure having you.